Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author and TradingView with over 190k reputation points. In this video, I will be speaking about GBPUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong historical support and demand area and rejecting it to the upside. In fact, from here, all these previous rejections to the upside have been created. Every time that the market tested its zone, it got rejected to the upside quite aggressively. At the moment, the market is testing this exact same area, has already started rejecting it to the upside. And in a situation like this, more bullish price action could be expected away from this level, as already happened in the past every time the market was testing this exact same zone. So let's keep this in mind and drop down on the weekly time frame. Now, from a weekly perspective, what we can notice is that we just had the development of a perfect uptrend. We just had a series of higher highs and higher lows being created here. And every time the market went and tested exactly the previous resistance turn support, which is exactly what you would expect in the case of an uptrend. That is what you usually find in textbooks. Like a textbook uptrend, you expect the market to create a series of higher highs and higher lows, in which every time the market is, yes, creating the higher highs and higher lows, but also going and testing the previous high. And that is exactly, in fact, what the market has been creating here. And in a situation like this, we could expect the continued development of this uptrend unless we will see some structural change. But at least at the moment, everything seems still quite bullish, so more bullish price action could be expected. So let's keep this in mind and drop down on the daily time frame. Now, I did speak about GBPUSD just a few days ago when the market was around this area and explained all the reasons for which from here we could expect this rejection to the upside. And in fact, that is exactly what the market gave us. And by the way, I will link in the description that previous analysis so you can go and check it out for more free education. But at the moment, what kind of structure the market has been creating? Now, before we dig into more detail on what we have here from a technical perspective, first, let's go and see what we have when it comes to the commitment of traders. So essentially what hedge funds and the big players in the market are doing precisely on the GBP. Now, the first thing to keep in mind is that if we're looking at the data for the GBP, we're actually already looking at GBPUSD because all currencies on the spot are traded against the USD. And what we can see is that with the last reports, lately net positions have been slightly decreased. We went from 108k to 62.9k net positions. So in the very short term, institutions seems to be moving back to the bearish side, adding 10,000 shorts and closing 7,200 longs. However, if we look at the long term, we can see how GBPUSD has been gotten much stronger. We went from having a negative net positioning of minus 28.9k net positions with 72.6k shorts compared to only 43.6k longs, all the way up to having 62.9k net positions, so a positive net positioning, so the complete opposite with more longs than shorts, with 124.8k longs from an institutional perspective compared to only 61.8k shorts. So we went from having more shorts than longs to now having more longs than shorts from an institutional perspective on GBPUSD in the long run. So this short-term decrease of net positions only signals a potential short-term correction that could happen in weakening of the GBPUSD. So let's keep this in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in description, so you never miss new updates. Now back to the analysis. So in a situation like this, things would really get interesting if the market would create a short-term move to the downside, essentially falling under the weight of the short-term negative positioning of institutions, so their decrease of net positions. Now, if this market falls to the weight of this short-term movement of institutional positioning back to the bearish side and does create this move to the downside, that is where things get very interesting, because if from here the market creates a move to the downside, essentially we would have the creation of an M pattern. And in general, after the creation of an M pattern, what you would expect is a potential rejection higher, completing the M pattern at the neckline. So if the market here does create this M pattern, at that point, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market, at that point, I wouldn't be surprised to see a potential rejection to the upside, completing this M pattern at the neckline. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. Here, you have the possibility to gain access to the most complete mentorship program ever that I have created. You have the possibility to gain access to all the courses, the trading station software with the Telegram signals integration, one-on-one private mentoring directly with me, the COT data software that you see me use in all these videos. And if you continue to scroll down the website, past the testimonials, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the sign-up process. So I really suggest that you go and check it out. The link is in description and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, let me know in the comments below any pairs or topics that you would like me to cover in the next videos, and I will see you in my next breakdown.